Things are accelerating in ways that are hard to understand.
We are in a time that is probably the fastest change that humanity has ever seen.
Venture capital is often misunderstood, but yet early VCs saw the premise, backed it anyways.
The reason why we started this whole journey is because the market is really changing massively.
In the beginning, we just wanted to do a 10 million small venture fund. Then we started digging into actually what's really missing. We realized we would have to build all of that, and then we realized we can't build all of that.
People thought, why is the Allocator One team backing first-time and emerging fund managers?
We have talked to over 400 emerging fund managers all over the world.
If you compare the data from last year to this year, emerging fund managers is receiving significantly more data.
Can we talk a little bit about how we're defining alpha in this world?
Alpha is this insight. Those people know something that is non-consensus, but driving the world forward.
Good morning, everyone. How's everyone doing today? Sufficiently caffeinated? Great. Well, welcome to the Allocator One Alpha Summit at the absolutely beautiful Coco venue. Now, I've had the privilege of speaking on a number of stages around the world, but this stage always holds a special place in my heart because it really acts as a bridge between the past and where we're going in the future. So my favorite thing about this venue is that Madonna actually performed here as part of her first European tour, and then Steve Jobs did all of his annual product launches here. So this stage has been part of cultural defining moments for decades, and today the focus is on capital, and specifically how we can steward capital to actually build the future world that we're all excited about. Each and every single person who is in this room is enormously influential. You're either representing a family, an institution, you're a builder of what's coming next, and there's a lot of responsibility that comes along with that. And today the focus is on venture capital, and specifically the private markets. What's new, what's emerging before it ends up hitting one of the big headline news stages. And venture capital is often an underappreciated asset class, and it's often misunderstood. But yet, in the past year, have you used an iPhone? Gotten into a Tesla? Listened to a Spotify playlist? If so, you've used a company that once was seen as laughable, improbable, and unlikely to be true. But yet the early VCs saw the premise, backed it anyways. So venture capital, 10 years from now, the things that we consider to be mundane and normal part of our daily life, those will probably be the inventions that we end up backing as a result of some of the insights that you get from listening to the presenters on stage today. Today's focus is on giving you the alpha, the insights before the headlines, and it's structured to give you the macro view of where things are heading with detailed TED Talk style presentations from 9 of the world's most promising GPs, and this is from a pool of over 1,000 GPs, so that you can walk away with intelligence that you can start to apply inside of your allocation decisions. Now, in case you're wondering, who is this lady up here and why am I listening to her? For those of you I haven't had a chance to meet yet, my name is Ileana Orris-Valiente, and I decode signals day in and day out, whether in my role at Accenture, where I'm the managing director and the head of all of our innovation centers for the Americas, or as an early backer and investor in the team at Allocator One. So absolutely delighted to be on the stage here today. We have an absolutely packed agenda to help you uncover alpha. So with that, let me bring up to the stage the two founders. They're already here. You gentlemen are so speedy. Appreciate it. So we have Felix and Michael. For those of you who haven't had a chance to meet them, you are going to love this discussion today. So hello, gentlemen.
Thank you.
All right. So Michael, let me start with you. I recall last year when we started the preparation for the summit with record time, very little time to prep, people thought, why is the Allocator One team backing first-time and emerging fund managers? That seems like a really, risky, unorthodox bet. How would you say things are looking 1 year in? Are you happy with your life choices thus far?
That's kind of a loaded question, but yes, I am. First of all, what's not changed is that you're moderating again, and I'm very grateful because this truly is very important, I think, for this event. It was last year and this year, so thanks, Eliana. I would say the main thing that's changed is that last year, the things that we were saying, we were mostly based on curiosity and some confidence. Now we also have a lot of data and results, which is which feels very good. I think Felix is also very happy about that. We have, over the last year, talked to hundreds and hundreds, probably over 400 emerging fund managers all over the world. We've looked at over 1,000 altogether now, since we started 2 years ago. And we've invested in, I think the number is not announced, but it's over 20, right? So not all the deals are closed. What we can already see, and maybe I'll start with some numbers, we already have 4 funds that are over 2x MOIC. We have 1 fund that is over 3.5x MOIC. We have not even been deploying for 18 months. So this is something that I'm very proud of the fund managers that we've picked. I think one thing that we discussed last year was that really Allocator One was mostly focused on the way that Felix and I think we should be deploying capital ourselves, and the fact that to actually do that, we don't have enough capital, right? We need way more. Most of the basic tenets that we had in the beginning held true. We had some positive surprises and we had very few negative surprises, I would say. The one negative surprise is actually that the areas that you want to deploy more into, there's still not enough demand, right? From the fund managers, actually. So I think there's a lot of opportunity to find and also to foster more fund managers in the areas that we actually want to deploy to. And we have just, as I said, way more confidence which these are.
And so one of the things we often hear about venture capital is that it's an asset class that requires you to make decisions before you have perfect data. And so maybe you can briefly speak to the fact that you've seen so many of these GPs applying. How are you making the decisions with all of this uncertainty?
I think the main point is that there's not that much uncertainty when you start talking to everybody that's currently working in the field, right? So really what we do is we try to talk to basically everybody who's raising a fund in the specific areas that we invest in, and then we just figure out who has the best chances to make something out of this, and then we just align with them, and it becomes a self-fulfilling prophecy to a certain degree. So far we have not, in the UK last year or over the last 18 months, I think the number is, only 22% of the people that started a fundraise got to a first close for a venture fund. Our hit rate for backing emerging managers to get to a final close is 100% at this point, except for 1 fund. And there it has more, the reasons are clear why that is. So it's just taking a bit longer. I think the uncertainty is not that high once you really start to get a grasp of what is the capital that wants to go into venture and who is actually capable of deploying it. Then you get to a point where you can start making decisions quite confidently, actually. And that's, I think, where we are right now, which, again, is, I think, a great accomplishment.
So let's zoom out for a moment, and I'll go to Felix next to think about the macro environment that we're operating in, and what's the backdrop that this audience needs to be paying attention to as far as trends and the rest go.
Thank you. Again, thank you for actually moderating this year again. This is really amazing. We wouldn't know how to run this whole thing here without you, I must say.
They put their LPs to work.
And thank you all for actually having the trust into us, into Allocator One, and spending your time and flying in from all over the world to this place today. Thank you so much. The reason why we started this whole journey is because in 2022, we had a couple of conversations, 2023, on the market is really changing massively. And as we both have been investing in various asset classes and operators, we saw like maybe there's an underlooked asset class with this first and second time venture managers. Why is that? It is because those people seem to have an insight. Why is this insight relevant? This insight is relevant because it seems like that we are in a time, and we probably all feel that is probably the fastest change that humanity has ever seen. Why is that? There's one reason, geopolitics. And just to, clearly say it, westernized world goes eastern. That's it. Industries that we had for many decades are completely changing, upside down. And this is not only, but mostly driven by technology. AI, quantum, decentralization, robotics, you name it, on all the different levers. And we like to compare this a little bit just to give you an idea with a time of 1879 or whatever you want to say, like 1870s to 1910, where we had 3 inventions: car, phone, electricity. After that, humanity had golden times. But between that 1910 and golden times, we had some complexities, to call it this way. And this also means that a lot of wealth has been redistributed. We had a lot of change. And here comes again the insight. We need to learn, we need to understand, if you want to thrive in this world successfully, with a little bit more confidence, alpha and insights help you not to predict the future, but to have a little bit more understanding.
So we're using the term alpha quite a lot. In fact, there's a research report that you'll have a chance to download later today that we've had a chance to collaborate on. Can we talk a little bit about how we're defining alpha in this world, and in particular this alpha gap as well?
Then maybe I start. Alpha is this insight. We are talking here about people that in this world have been in an operator position, could be at a large firm, at Foxconn or Apple or Meta or whatsoever, and they have been in very important positions, like, for example, leading the process of manufacturing the iPhone, right? And with that insight and being a responsibility, selecting different plants and processes, developing patents, they know very well, because they have been involved in those processes, what are the next steps in the industries? What will be accepted? What are maybe political tensions? Alpha means those people know something that is non-consensus, but driving the world forward.
I would agree. And very often what we see in the fund managers that we talk to, what you can see it in a personal sense is like a focusing down. So these are people that have been in a career for 10, 15, sometimes 20 years. They've learned a lot, they have enormous networks, they're making a lot of money, they could just coast for the rest of their lives in a cushy job, but for some reason they really focus down on something that sometimes even seems not quite interesting, not quite sexy on the outside. Very often when you then start to look deeper, it gets more and more interesting, and the world kind of opens up after this focusing down when you talk to them. That's the visceral feeling that you get when you talk to the managers that we invest in. So when you look at the pitch decks or we look at even the presentations, sometimes it's not clear. So you have to spend a bit of time with them. And in our process, you have to be willing to make a deal. So when people get onto a call with me, they're kind of nervous because they know I might write them a 3 million, 8 million in the future check after a couple of calls, right? That means it's an existential situation at this point, typically, which changes the dynamics quite a bit. And our entire process is built around this dynamic. So finding people that are doing something extremely important to them, and then kind of pressure testing them through the process that we've built for deploying our capital.
Felix has used this analogy from the sporting world of scouting. Now, I know nothing about sports, so please don't ask me any follow-up questions on that. But Felix, maybe you can share that analogy with the group around what you guys are looking for.
It's like a scout that is, looking for these new talented soccer players. They are like, playing for a couple of years. They're 14 years old, 15 years old. And you have scouts that are just all the time, do nothing else apart from like spending a lot of time with those people, watching them, observing them, talking with them, with their social circles, with their parents, and they see something before anyone else sees something. That's basically what Allocator One is doing and what we mean with alpha.
And so there's this concentration of capital that's happening, and this is one of the big themes you'll see in the research report, and a lot of money flowing into AI, like over 50% in the first half of this year has flown there, a lot flowing into the large established fund managers. Where are you seeing that disconnect? Let's put some numbers around it.
Yeah. So those numbers that you actually see is our proprietary data. We have screened the data of the 1,000 funds that we have received, and we have correlated it with also different studies where we see that when you look at first-time fund managers, specialized fund managers, that actually based on studies of, there's different ones, Cambridge Associates out there, 44% of them are delivering 5x plus returns, really amazing returns, top quartile returns. So when you only assume that those specialized fund managers in the early days are really making a difference, we actually see that if you would like to fund all of them, there is a gap of this 15 billion. Let's say not all of them make sense, as we just see, because if you would fund all of them, not every thesis, not every venture makes sense, yeah? Every approach makes sense. But if you take the studies and you even make it a bit more disciplined, the top 25%, and again, there are studies that are saying you should actually do the top 44. Only the top 25%, there's a gap of 3.75 billion. We have written a whole report about it. I think we're going to talk about it as well, with a lot of details on that, because here you see a huge opportunity where you can actually deploy and have a really great return, but also deploy into different areas that are really critical for us as humanity.
So the top fund managers have shown disproportionate financial returns. There's not enough money that's flowing into those regions. Obviously, not every fund manager on the planet that is looking to raise a fund should raise a fund, so totally hear you. You also have some data around the global picture and the flows. Let's talk about that.
What we actually see is that there's a positive news. The positive news is that the whole industry is growing, meaning there's more capital flowing into it. Let's take this as an insight. If you compare the data from last year to like this year, the whole industry, first, second time, emerging fund managers is receiving significantly more data. Nevertheless, regardless of the region, you have a gap that is always above 90%. Regardless if you're talking about Northern America, Middle East, or APAC, it's always the same thing.
And so, Michael, let's talk about what we're seeing outside of just Silicon Valley, which is where people's minds usually go to when they're thinking about the VC markets. And I know a lot of the emphasis for the sessions today are shedding a light on those markets.
I think the main thing that we find in our work in deploying the capital that we raise is that there is definitely going to be, there is currently happening actually a shift from a focus on Silicon Valley and the US towards the rest of the world. That is very visible both in the data that we've collected, and it's also just visible in talking to LPs. So there's a lot of LPs that I've talked to that just literally said things to me. I really want to stop funding American exceptionalism, right? But it's hard to find that's a quote, but it's hard to find the opportunities. And the thing is that venture in the US is so incredibly professionalized, and it's come so far that it looks easy to deploy, because you can just try to get into Andreessen, you can try to get into Sequoia, and it gives you a good feeling for now I'm doing venture. Whereas these things don't really exist quite in the same way. These brands, these decade-old brands, don't exist in the rest of the world. But that's our opportunity, basically. So what we're doing is we're finding the opportunities in the rest of the world. We're comparing them to the best things that we see in the US, because of course we invest in the US as well, and they need to feel the same in the end. And then when we look at the data, it also needs to look the same. Like there need to be a high correlation between a first-time fund manager in the US that looks really, really good in the US, and one that looks really, really good in Malaysia. And these things are popping up more and more and more. This is what we see when we look at this picture.
And what you're building with Infrastructure One is actually a direct response to that market gap opportunity to be able to build the infrastructure to actually empower those emerging managers in the regions where they don't have that institutionalization and professionalization, if I will.
Yeah, exactly. So since the US is just so far ahead in venture in general, they also have the infrastructure. So it's easy to start a venture fund in the US. It's not so easy to start a venture fund in Singapore. And what we're doing is with Infra One is basically we're just fixing it. So by the end of next year, We're going to be in 15 jurisdictions, and currently we're in 6. You can come to us, you can say, I want to build a venture fund. If we like what you're doing, we'll just set it up for you and run it for you. This is kind of the second part of the business, but obviously these things interact.
So we've seen a concentration risk, if you will, in terms of geography, but we're also seeing a concentration risk in terms of the amount of money that's flowing into AI as a sector at the expense of everything else in the world that's needed to actually power AI, but also everything else that we need to power life. So can we shed some light on some of these underinvested areas that inform a lot of the agenda for the topics today?
Yeah, I think my main problem with the hype behind AI, it's twofold. First of all, it's a bit philosophical. We're nowhere near AGI, if you ask me. It's just not happening. There's absolutely no signal that says that. It's complete bullshit. And the other thing is, if you're investing in funds that are very focused in the area, the main problem is, to bring it down to basics, is you're just going to be investing in 4 CRMs in the same fund, right? And I'm not sure to me that doesn't sound very useful. That's the main. There's nothing wrong with it overall. It's just that as an individual allocator, you just need to be careful not to do that. You don't want to fund 15 competitors in the same space just to see who gets to win in the end. It's like going to the Colosseum. I'm not sure it's what most people should be doing. Whereas there's lots of areas, and you see them here on the screen, where there is absolutely a huge gap in the amount of pre-seed and seed funding available, especially specialized pre-seeds and seed funding, right? And then after that, 2 years from now, in these areas, in most geographic areas of the world, there is a huge gap in Series A funding and pre-Series A funding, and on, right? So in the last 1.5 years, for unfortunately very tragic and real reasons, in Europe, there's been a lot of discussion about defense, right? But that started 2.5, 3 years ago. Only now people are starting to set up Series A funds for the sector, and it's quite a struggle to do that. And we will see this repeat over and over again in these areas over the next decade, for sure, both in Europe and in other regions.
So in a way, a lot of these areas are spaces that we need both more startups innovating in, we need more of the emerging fund managers, and we're going to need all of the later stage capital to ensure that they're not starved of funds and we're not operating from back footing here. Okay, that makes sense. Let's zoom out for a moment outside of venture. And I know that might seem surprising for this audience because most people think of Allocator One as, VC fund to funds. But a lot of the signals, a lot of the alpha that is being generated through their early stage finger on the pulse of where the money is flowing, those signals are useful for every person in this room, even if you're not writing an early stage VC check. So Felix, maybe I'll pass the floor to you to highlight a little bit of where the thinking is going on the buyout side of things.
Maybe I give a background story on that. Before I started Allocator One, I was running a company builder private equity firm, focusing on very traditional industries and building on top of the assets, new revenue streams connected with data. Okay. What I learned doing this with some of the largest enterprises on this planet is technology is really changing the narrative very fast. You come up with a narrative in a boardroom, you deploy 10, 100, 200, sometimes $1 billion, 5 to 7 years later, your equity story is changing because the market is much faster developed as you actually thought. This speed the speed of that has increased. Coming back to signal. It is important, and this is my core belief, when we started as well, Allocator One, we were considering doing actually PE or VC, and then we decided VC is the right play, because VC gives you the signal where the change is going to happen, and this helps you in your private market, credit, loan, or buyout, to actually adjust your narratives and to understand what is really a no-regret move. What does really make sense to deploy your capital in? Because your equity story that you actually buy needs to hold true 5 to 7 years later when you want to have an acquirer for your company, or to understand the right platform and add-ons that you actually want to have.
Do you want to give your house cleaning example?
Again, sorry?
Do you want the house cleaning example?
Oh,
It made me chuckle.
We talked about this on Monday. We literally considered a few years back, last year, to actually go into the industry of like cleaning of like old traditional housings in Vienna. It's like 4 companies running it, and we were like, this is an amazing play. Because you always will need human beings in order to clean all the different stairs of the different houses. Obviously, with Allocator One, we have been so deep in all of that, traveling the world, we just didn't execute on it as a family office. Now, a year later, meeting all of those different people, being in robotics and seeing all the different use cases, my whole equity story is actually gone. You don't need these humans anymore. You will have robots even for those houses that are very old that can actually make it happen to clean the stairs. Completely. Which looked absolutely like the most easy, boring, case, not true anymore.
So let's wrap up. We're going to be timing out here in a moment with a super quick zoom out of the big trends that we're paying attention to, the geopolitics, the industrial changes, and the technological disruption. Is there anything that you want to prime our audience with so that as they're listening to the next few TED Talks, they're keeping these shifts top of mind?
I think basically what the two of you just mentioned in the last couple of minutes. So I think things are accelerating in ways that are hard to understand, I think. So if you take Allocator One as an example, in the beginning we just wanted to do a 10 million small venture fund for our own use case. And then we started digging into actually what's really missing in this market that we're looking at. And then we realized, probably we would have to build all of that. And then we realized, probably we can build all of that. And many of these things probably we could not have built 5-6 years ago. So I could not operate this firm without ChatGPT, as stupid as it sounds, but I would not have the executive function necessary to do it. Because just the amount of stuff that I put out every day, I could not have done that 5 years ago. Or I know I was not able of doing that 5 years ago, right? And it's basically just because of some basic technology that is augmenting my capability to do useful work and be accessible to other people. When you're listening to the people on stage today, look for that. So look for what are they talking about that probably I don't understand yet about how fast things are actually changing. And also there's some resistance to really understanding that, I think. Because as Felix said before, this is probably one of the points in history where things might go insane to a certain degree. They already are, but we're just kind of like the frog in the pot, you know. This is a feeling that I get. It's not a negative feeling if you're aware of it, but if you're not aware of it, I think it's easy to look away from what's happening.
So we won't have time to go into much more depth today, unfortunately. We have to get to the rest of our programming, but this is the QR code for the research report. We'll share it out with the attendees later, and you'll be able to digest it at a slower pace when you're not being bombarded with content. So thank you so much, Felix. Thank you, Michael, for joining.